What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is September 30th of 2022, TGIF, everyone, and we made it through the month of September. September has been the worst month, or the worst September since the year 2008 when the market crashed. So if you successfully navigated this market this month, I will say that you can survive anything. Let's take a look at these box scores. We'll talk about the markets today. S&P 500 finished down 1.55%. Our NASDAQ QQQ finished down 1.7%. Our IWM small caps finished down only 0.73%. Our dogs of the Dow are actually the biggest loser. They were down 1.68%. That could have something to do with some rebalancing flows. The ARK Innovation ETF was the best performer. It was only down 0.19%. And the TLT Bond ETF was down 1.29%. Interestingly enough, the volatility of the market did decline. So you can see that as a bit of a positive divergence. And I have a theory as to why that may have occurred. Our percentage advancers, you can see small caps had 38% breadth, and the up volume in the market was 42.4%. So it's kind of interesting. Like, really what that leads me to believe, if I see up volume of 42.4 and I see the S&P 500 was down 1.55, I know that means, okay, a lot of this weakness was driven by a few of the mega cap tech stocks. Let's actually see if that is what happened when we looked at our heat map. Trend model did flip from a -1 to a -3 reading. For today's economic data, we did get personal spending data. That came in pretty solid, and we all know if the consumer's doing okay, that's bad for the financial markets because the Fed's trying to push us into a recession. The PCE data did come out, and you can see this came in a little bit hotter than expected. The forecast was 6.2%. For year over year, it did come out at 6.2%, but it looks like this month over month reading. Basically, what we want to be seeing for inflation is we want to see month over month declines. The year over year figures, those for the next couple months, due to the base effects, it's going to be very tough to get those much lower, but the month over month reading is really what you want to pay attention to. That said, we had already gotten our CPI data for August. We had already gotten PPI, and the market was pretty well aware that inflation for August did not decelerate. You can see we also got the Michigan consumer sentiment data for September. That came in at a 58.6 reading. So, according to the Fed, if consumers are still doing okay, that's not good because we want to be in a recession. VIX Futures term structure, this is still inverted. So that means we are still in the eye of the storm. Finviz Heat Map. Now let's see. Was the sell-off driven by the mega cap tech stocks? Absolutely. You can see Apple was down 3% and Microsoft was down 1.94%. These two stocks combined make up about 13% of the S&P 500. And we have to remember, today was quarter end as well as month end. And so a lot of times what happens is the stocks that have done the best, those get sold off a bit. The stocks that have done the worst, sometimes those end up getting bid up a bit. And Apple really has gotten hit. Now I will say there's really no corner of the market that has been untouched by this sell-off. Sectors. What outperformed today? We had gold miners up 1.82%. We also had biotech, which was up 0.58%. We had real estate up a smidge. We had cannabis up a smidge. And again, like for something like cannabis that's at the bottom of our momentum rankings, this could just have something to do with some month-end rebalancing. In terms of underperformers, we had transports down 2%. We had utilities down 1.93%. And you can see we had technology down 1.92%. Style factors. Our worst performing style factor for the session was growth, down 1.7%. It was high beta, down 2.17%, followed by growth. Best performing style factor, you can see that international value and small cap value were only down 0.65%. In terms of trades, only thing that, I didn't do any opening trades. The only thing that I had was these IWM September 30th 168 calls that I took a shot on yesterday. These expired worthless. And I put here, couldn't really get anything going this month till the very end. Every once in a while, it's good to have a challenging month because it allows you to see the flaws in how you're navigating the markets and get better. And I'm going to be digging deep into my trading journal this weekend, and I'll be letting Pristine Capital members know what I find. There's a bunch of things I already know that were tactical errors made in September. I put here the toughest part is confronting mistakes but it's the only way to get better, upward and onward. So yeah, I think for this month of September, there were a few tactical errors I made and really just some things I could have cleaned up. So I'm definitely going to be looking into my trading journal and just, kind of dissecting what happened and where things could have gone better. And that is super important. Like, as I look at this month, I'm like, yeah, I didn't do so great this month, but this was the worst month since September 2008. So if there's any month to like expose some flaws in your system or how you're navigating things, this is the perfect month. So yeah, I hate whenever I feel like I underperform in my trading. But to be honest, like now it's all about just take some lessons from, let's say, like if you had a not so good September as well. If you just kind of be like, oh man, September sucked. All right, let's move on. You're not really going to get any benefit from that experience. Really what you have to do is confront your own decision making and be like, where did I actually go wrong? What happened here? And you have to dissect it. And you have to perhaps add some new rules to what you're doing in your trading. And that's really how you progress. That's how like you actually take a loss and you build on it. Because for me, like I'm focused on finishing the year strong. We are still on track to have a really good performance year. And I'm focused on 2023 as well. We're about to be entering Q4 of 2022. So yeah, we're in the final, home stretch of the year. And take a look at the seasonality for that home stretch. Right now, the seasonality for September, look at this, for a midterm year, seasonality for September is pretty much down only. And we had the Fed's QT program starting. In terms of just headlines and news, we really got nothing good. And the market just went perfectly in line with the seasonality, just kept stair-stepping lower. So we can't really say like, oh, this was a huge surprise. How could the market have gone lower till the very end of September? I mean, the seasonality chart really just spelled it out for us. But that is the past now. Now we have to look into the future. And what does the future hold for the seasonality? Well, things get a whole lot better as we enter October, November, and December. So that is the silver lining there. And I know most of us have recency bias, so we're just going to think, oh my gosh, it's never going to get better. But I think that's a good thing that so many players have gotten washed out of the market. Let's take a look at the S&P 500. We did finish the session down. You can see these futures are down 1.37%. And this was something that I anticipated could certainly happen today. I actually think today it could have gone a whole lot worse, given that we got the acceleration in inflation. Something that we talked about in our pre-market webinar today was the JP Morgan hedged equity trade. And this is a huge trade that can have big market impact that always takes place at the end of every quarter. And heading into the event, I watched a bunch of videos. There's like, these gamma gurus and people that really follow this trade. So I was trying to get a sense for like, hey, what could happen here as a result of this event? Pretty much all of them were saying, hey, given where the market is right now, in order for them to roll their trade, there's going to be a bunch of negative deltas that hit the market. And that could be reflected in the market on close order for today. So it's kind of like this trade where everyone knew it would have some sort of negative impact on the market. And we can see that it did. I believe into the close, there was a market on close order of like negative 6.5 billion. That's very large. And I think a lot of that can be attributed to that JP Morgan trade. That said, I think a lot of players that are not really paying attention to that, they're just like, oh yeah, the market broke down. It broke the level. That means it has to keep going down. But to be honest, like I think it's more just like a one-day phenomenon for that trade. And I think Monday really is a clean slate for the market. We flipped our seasonality indicator. This is now bullish. And I think speaking of things that I could have done better in September, just for full transparency, my trend model was pretty negative, for almost like the entirety of September. Like I think it flipped positive maybe at like one point or another. The one thing that I sort of got lost in the sauce of was historical analogs for the market. And I was like, oh my gosh, the September correction in 2020 lasted 15 sessions. The September correction for 2021 lasted 20 sessions. So as we started approaching session 20, I started orienting myself more towards the bullish side of the market. And the big nuance, I'm sharing this because I think you can learn from it as well. the big nuance, and this is someone produced a study. And this study, they posted on Twitter. I was looking through my bookmarks. I couldn't find it to share with you. But essentially what their study said was, in terms of any market sell-off, the majority of the losses occur at the end of the sell-off, not the beginning and not the middle. So with that said, if you're trying to catch the bottom of the market, it really is not worth it. Because, like, if you're a little bit too early, which I certainly was for getting exposed long in September, if you're too early, you might have, like, that's what happened to me. I was able to avoid the first, I would say, like, 2/3 of this sell-off. And I was even, like, shorting the market up here at the peak. And we rode this, for some very nice gains. Like, pretty much played this entire sequence pretty well. But really just this last piece of the sell-off, this is where I started, allocating to the market. Whereas if I had just done a pure, following of my process, which is the trend model, I use the trend intraday, I use the tick index intraday, and then I use the dark index and seasonality as secondary indicators. If I had done that, I probably could have been shorting the market, just continuing to short the market even into this downturn, and could have really maximized this opportunity. Because, the people that really just crushed September were the people that just said, the market's still going down, trend is still negative. Let's stick with the short side, or let's stick in cash. For those players, they really nailed this sequence, and that is fantastic. And the process that I put together would have allowed me to nail it. I think where I made a tactical error was kind of deviating and going with day counts for sell-offs and things like that. And that's just a learning lesson. So for me, that's pretty exciting, because I'm like, I have all the tools to really just crush one of these sell-offs and even juice out the final piece of it. So yeah, that's probably my biggest takeaway for this month, to just stick with a process that has maybe 2-3 components. And you can save yourself from a lot of reading, a lot of, just focusing on different opinions, that whole sort of thing. But yeah, let's move on to the NASDAQ. We will take a look here. NASDAQ was down 1.51%. Same deal, we actually undercut the lows from June over here. Russell 2000, this one was down 0.7%. This one did not undercut the lows from a couple days ago. And I would say most of the S&P 500 sell-off definitely attributable to Apple and Microsoft. We'll actually take a look at those charts individually. Dow Jones, you can see this one did undercut the lows. And let's take a look at the ARK Innovation ETF. ARK Innovation ETF was barely down. It was positive for most of the session. We actually got above this 10-day EMA, not too shabby. And we closed out with a green candle, which is all right. Barely a green, we'll call it a doji. But yeah, this one closed down 0.19%. So I think this is a pretty good look for next week. And ARK is my biggest position right now. I'm looking for a rally into the end of the year. Let's take a look at Apple and just see what's going on with that one. Apple finished down 3% today. This was, one of the big contributors to the downside. We got below this Venom S1 pivot. Remember, we're going to have a new monthly value area for next week. And take a look at this. We do have a VPOC down here at 134.91. Now, if Apple is to hit this VPOC, let's say we just get a little bit more downside into the beginning of next week, for example. If Apple takes out this VPOC, I would imagine the S&P 500 is also going to take out its VPOC. The S&P 500 has a VPOC down here at 35.55. These both line up very nicely. So that is definitely something to keep an eye on for next week. Let's take a quick look at how the dollar fared today. Then we'll go to treasuries and then we'll wrap for the weekend. Take a look here. Our dollar index finish looks like I see negative 0.07% here. It looks like we put in a green candle. I would say overall this is still looking a little bit better because we're no longer making that parabolic run. The dollar index has at least started to break down. And you can see we are trading below the 5 EMA. We're above that 10 EMA. So dollar index overall starting to act a little bit better. Let's take a look at our 10-year treasury. This started off, it was green at one point during the day and really just kind of flopped into the bell. Doesn't really seem like there's many buyers for these treasuries, but at the end of the day, we did put in a low 2 sessions ago, and we did not retest those lows. And then our 30-year treasury ETF, which was down 0.74%, very similar deal. So yeah, this concludes the month of September, everyone. I think the most important thing as a trader is having mental resilience and just understanding like the market does not owe us anything. Like it's never, there is such thing as trash trading. There's really no such thing as a trash market. There's always opportunities for all of us. And yeah, for the month ahead, I'm really looking forward to just kind of like starting off with a clean slate and, just putting in an awesome performance month and just finishing out a really good performance year. We are going to be putting out this weekend our Pristine Capital weekend market analysis video. That's where we do a top-down analysis of the market. We're also going to be putting out our weekend watch list video. So if you'd like to participate in those, you'd like to check those videos out, go to pristinecapital.net and get signed up there. All right, everyone. Enjoy the rest of your weekend. See you all on Monday.